Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep watching from gold market. So here it seems that on the very short term, overall sentiment in the market stands relatively positive, because even on the performance on the daily chart this week, you could see that any sell-off that has started here was bought out by the new traders that stepped in on the support area and just returned back price to the level around 1750, 1760. And since the actually performance on the interest rates, you could see looks a bit weak, and upward action has fizzled recently. That provides additional support to the gold. So maybe market later will proceed to the XOP, but hardly this will happen before non-farm payrolls release. And this could happen only if this will be really positive numbers. But currently, with this pullback, some minor washing rays on the 10-year yield, you can see that it was minor spike up here, grabbing the stops above the zero market knowledge, turning down and aimed to go a bit lower. Well, that provides support to the gold for at least for intraday performance. So the same story we could see on daily chart of the gold market. In general, the setup that we discussed recently, so we said that short-term context is bullish because we have the bullish trend, thrusting action from the support, and market stands above the major support areas, showing nicely reaction on the support as 30% support on intraday charts. So that's why this very short-term context stands bullish, and in the recent couple of sessions we discussed the chances how theoretical position could be taken, but the overall performance of the price on gold is very choppy, and it shows changing in the direction very fast, and we just can't get the entry levels that we have specified previously, just because market ignored these levels, turning in the opposite direction and showing the significant swing in the opposite direction. So it's providing no chances to get the entry at the predefined levels. On the follow time frame chart, mostly the situation stands the same. Recently, market has formed a grabber, but definitely has no special meaning besides it already has been erased, as you can see by this performance that we see here on the gold. In general, market stands in the same consolidation, widening triangle, and potentially it's keep chances on the upward action as well, because as you know, the direction this market follows usually is the same as the direction of the breakout. So if market breaks out of this consolidation to the upside, it means that it will keep going to the upside. This is a kind of the indecision consolidation that has no special character as, for example, flag pattern, which is a continuation pattern. It's usually pennant or something that's sort of reversal patterns, but this is kind of the indecision pattern. So the market is choosing the direction. Interesting moment here is that since overall context we treat as a moderately bullish, because market holds pretty nice support area, trend stands bullish on the follow time frame chart, on the daily chart. Performance on the interest rates a bit muted, so all the stuff support the possible performance of the gold. So on the hourly chart, two interesting things that to consider. First of all, if you will calculate the extension of this retracement that recently has been formed, then the 1618 level 1784 perfectly agrees with the potential neckline that we discussed previously, this potential part of the hand and shoulders. Yes, the shape of the hand and shoulders looks a bit, well, not quite broken, but it's too choppy, so we'd like to see some a bit more straightforward action here. But at the same time, you could see that it keeps some harmony. So here was some flag consolidation in this area. Now we have here is the same type of the consolidation. And then maybe some continuation here, as well as drop, symmetrical drop in the left part of the pattern. So theoretically, sometimes it happens. So if market, for example, will form here the butterfly or something of that sort, that will be great pattern to follow. And as it has the same target as the neckline, which could resurrect the idea of this head and shoulders pattern that still could be formed on the market. Additionally, a second moment is to keep an eye on these two possible levels. So as we said, the direction of the breakout will be the same as the direction of the market after the breakout. Here, you could recognize minor head and shoulders that has been formed. Our recent ABCD pattern has been erased as market already stands above this former C point here. And it means that now you can see that the market trying to set the new direction. Here you have few options. So if you would like to trade it on the long side, unfortunately you could deal only with the hourly chart currently with the patterns that we have here, because as you can see we have nothing else on the higher time frames. And here, what particular scenarios you could use? For example, you could consider maybe taking the long position with the stop side below these lows, which is actually the 50%, the middle of this range, and hoping that market will just follow this ABCD pattern with this head and shoulders showing the breakout and keep going to the target. Or you could use far standing stop somewhere below the 1740, out of the range. So if market somehow will drop out of this, it means that the short-term context will be broken here on the hourly chart, and definitely will be some downside action develop. But that probably could happen only on payrolls release, when this will be more significant driving factor on the market. So, in the second way, maybe using of the stop buy order. For example, somewhere around 1770, 1772, when the market starts to break out, you could try to step in buying on a breakout with the target around 1785. So that's another way to act in the current circumstances. Both of these scenarios have its own advantages and disadvantages, but unfortunately at this moment we do not have any other tools to follow, and mostly could rely only on some kind of the patterns that we have on hourly chart. But again, as we said, in the general, currently market keeps bullish context. So in general, this performance we could call as bullish, at least in the short term, and chances the market will show kind of the A, B, C, bottom, D pattern type of action still exist.